Hey everybody, Kimosabi here. A little different chart today. It looks the same, but I can assure you this is in linear scale. I usually have my charts in log scale, but today I'm going to try to interpret Elliott Wave theory for you. We can look out at the daily chart all the way from the beginning in 2023, and we can see a series of waves. Real simple to look here. One, two, and then maybe a 1, 2, 3, 4, 5. Your wave 4, and now working on a 1, 2, something, something, something for a wave 5. Where does this extend to? Well, we could take some measurements in basic Elliott Wave format, takes it from the low, and measures wave 1 plus wave 3. So you measure that entire sequence and project it from your wave 4, giving you a target of roughly 86, 85, 86, 87 $1,000 area would be your wave 5, which that doesn't, that's not too bad. I personally think we go a little bit higher, but it's probably going to get there weird. But keep that in mind, that number. Let's actually mark it off. Mark that off right there in white. So we can look inside of this wave 3, and very indicative of your wave 3. This happens very often in wave 3 where you will have an extended fifth wave. So you have a 1, 2, this would be your wave 3, expanded flat for wave 4, and this wave is an extended fifth in the third wave. That often happens in wave 3. You'll have an extended fifth, and you can learn how to trade those. I actually learned from new wave traders. I forget what his name was. I think it was Hippo back in the day. So new wave traders had an episode one time a couple years back, 5 years now, where he discussed extended fifth waves and their expectations. And what he stated in the video was your extended fifth wave retraces a minimum of 618. And you got it right there. That's your minimum retracement for a wave 4 after the extended fifth wave. You'll come back to the 618. That's standard Elliott wave. I never heard that before. New wave traders talked about it, but it worked out pretty well in this case. But I really wanted to point your attention to the extension of that fifth wave in wave 3. It really extends. It really gets the party going so that the market makers party can start. This is what caught everybody's interest, is how quickly this was moving up here. And after that, you have selling that comes in, profit taking, you have excitement, and you have liquidity. Liquidity is here now because you have people that want to buy the dip because they thought, well, somebody made it big right here. I want to get in on that. This thing's going to keep going. And now it didn't. Now it's going to resume. And it very much looks like a topping formation should be forming somewhere around here. Maybe you get above 100K, maybe you don't. This might reverse and kind of leave you a bag holder. But look at wave 2 and how slow and, I don't know, just not very much action down here. Kind of not doing much. Looks corrective. Looks like an ABC, and then a distribution was what people were calling this. But if you look at the volume profile, this was screaming reaccumulation and backtest of the accumulation range, if you know how to read the volume as per Wyckoff. So inside of wave 3, you can count the waves 1, 2, 3, expanded flat for 4, 5. Sometimes you get back to wave 4 of lesser degree, but the minimum retracement was the 618 of that extended fifth wave in the third, which brings us to where we're at now. So we'll just take right off the low, we'll measure that impulse up and that retracement and see what it gives you. I actually haven't done this. Is that where your first wave goes and it's expanded flat for wave 2, or is this all 5 waves? I don't know. I'm going to measure to the top, project from the bottom, giving us a 618 target coming up soon of 77. So maybe that would call a wave 3. Wave 3 we kind of expected to get to 1618, and the wave 5 to get to the 2618. So inside of wave 3, do I have 5 waves here? Some could argue yes. I think it looks really messed up for Elliott Wave. So your wave 3 target may actually get up to the 2 to the 2618 before stopping. So let's take this potential wave 3 and where that's going or how that's going. Now just take it from the low, measure to the high, back to the low, and see where our extensions are getting. We're getting 81,000 could be wave 3 target. I'd have to count that out and see how that's going. I know some people are counting this as some kind of weird ABC, getting up to the 1272. Yeah, that's possible. That you have some kind of ABC here and an ABC there, and you want to be bearish. However, you're above your consolidation. This consolidation needs to remain intact to remain bullish. So I don't like that as an ABC, and we'll go over the corrective structures later. I'm trying to figure out this wave 3 and what it could potentially be looking like inside of here. Yeah, remember the extended 5th wave in the 3rd and how that played out. That could be what's happening here. Potential wave 1, 2. All of this is wave 3. This is a retrace of wave 4 back to wave 4 of lesser degree, very common. And now you're going up for an extended 5th wave. That actually makes sense. So that would give us a wave 1, 2, 1, 2, 3, 4, 5 in wave 3. And then this would give you some kind of wave 4 in this area. Probably getting back to the 77, matching the wave 2 maybe, and push up for a wave 5. And this wave 5 can extend if this is a wave 3 off of this wave 1, 2, 1, 2, 3, 4. This can be a really extended wave 5 in the 3rd. So pay attention to trend, where the trend is closing, higher highs and higher lows. It's going to keep pushing. It may push beyond where you expect. It can get very aggressive in a wave 5. It's the exit liquidity. It can really get moving. So that's kind of how I see this playing out. I'm seeing 81 is most likely coming in within the next week or so, if I had to guess, and then have some kind of choppy retracement correction up here. It might actually mimic this backward, like some kind of weird flat, and then push up again. Maybe just getting this leg up to 88. 88 would make sense. And then maybe come back down a little bit and then try to give one more final push and see how high it goes. I've seen some people trying to count this as some kind of 1, 2, I don't know where they'd put the 3. This would barely qualify, but I guess 3, 4, 5. I think the 3 is the shortest, which I don't think that works, but it doesn't look right, and it should have stopped there. So maybe that is your leading diagonal. Wow, that would be messed up. So let's take a trend-based fib extension from there, projecting that as a 5-wave structure. This is your wave 2. That's all you get. 3-wave pullback. That leaves you with a wave 3 target of 105, and then a wave 5 target of, no way, 128. That's 2 times the 64,000 high in 2021. That's actually a target I have. Well, this may just melt faces. Just I don't know why, but it'll melt faces if that is indeed the count. Um, yeah, it could. This could be an aggressive breakout. Might surprise people. That doesn't mean FOMO long and go all in 100x. That means you want to be looking to buy. You want to find buy setups and hold portions of those for longer and look for another buy setup. As long as price is moving up, you look to buy. Price is moving up, it's going to move up. If it's moving down, you want to sell it because it's moving down. But right now, price is moving up. But for those that want to count this as some kind of leading diagonal, something like this, I guess. There's your 5, and then you're looking for a 3-wave pullback. I think is not wise. If it does happen, it should just crash down, stopping everybody out into this liquidity and then get right back up in there. It would be a quick move. Not something that I generally try to trade. I don't try to trade quick moves. It's more of a gambling mentality, in my opinion, and in my experience from what I've seen. But if you are looking for this through a pullback, you are then re-entering this consolidation that has acted like quicksand for the past 8 months. If you get back inside the quicksand, you can expect to stay in there for another few months, most likely, unless if it's a quick wick and bounces right back up. But that would, me personally, the way I would trade it, I would just get stopped out and wait for it to close back above there and give me some kind of uptrend and then take it again. I'm not looking to short it. I am not looking to catch a knife. If price comes down here, closes down here, that would be my sell, and I'm targeting way lower because that's an up thrust after distribution, and you came back into this consolidation. Over the years, I've traded this many a swing failure patterns, and that is as good as they come. After distribution, you have a pop up to grab the liquidity, cleared out all the stops, keep pushing, 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 and then reject, close back down here, and then it's markdown phase coming for the coming months, most likely. So a lot of Elliott Wave traders that I've seen are looking for some kind of 3-wave pullback, and then we can go. And I'm saying that this is not a dip you want to buy. You don't want to buy this dip. You want to sell this rip, and it goes down. If it gets inside that consolidation, it's done, most likely. It would have to just be a quick liquidity crash and right back up. Some kind of weird news event. So, feeling that, I feel that this count is not recommended to even consider. You should consider staying above the box, most likely staying above that wick for now at 73,600. But let's zoom into lower time frame and see if we can find a buy setup. So as per the count, I was counting this as a wave 4 that retraced back to wave 4 of lesser degree. And after that, we got a 1, 2, somewhere up here is wave 3. This could be wave 3 right here, actually. And then you'll retrace and then back up. Generally, what we like to see is a retrace back to wave 4 of lesser degree, which your wave 4 of lesser degree is likely right here. You probably have a 1, 2, some 1, 2, 3, 4, 5, and this is acting like some kind of wave 4, and then you're going to come back to the wave 4 of lesser degree. This wick right here is often a buy setup. Often previous support acts as previous support, and that's at 72,671. I would look in that area for an uptrend to start. Stay above there, everything's gravy. The only reason to come down is to take all of these orders and push them down here. It should be an aggressive move, most likely, to shake you out and consider that was a top, impulse down, 3-wave pullback, and it's going down. So you'll see an impulse down, 3-wave pullback. It'll give you a little move down, and then it'll just melt your face off and go up to 81. Am I interested in shorting right here? Not in the least little bit. 4 hour is still making higher highs and higher lows. If I wanted to short this back down to the buy setup, I would wait for price to close a lower low. This is still maintaining a higher low. So this may come up, break the high, and then you close underneath here. That would give you your sell setup. Then you can move it down to here. And you're just targeting this liquidity right there and that liquidity right there. Then we'll look for retracements from, this is very common to do. You'll take the wave 2 and then you'll just move up to the top of wave 3 and look for the retrace. So your retrace would come to the 382. You might have a bounce there and then comes back down to the 0.5. Very often happens. So maybe that's your buy setup is the 382 to 0.5 fib retrace for wave 4, and then you push up for wave 5, and you would target there. Roughly 79, and a potential extension up to 83. I'd probably target 83 if I had to guess. But anytime you take a trade and you break above liquidity, you take some profits. Just like yesterday's video when I said you're making a higher low right here. So look for a small uptrend to start on a 15-minute 1 hour, and as soon as you break above that liquidity, take off 50%. And now you're doing the same thing again. So maybe it's going to top out, maybe it's already topped out, but it's still making higher highs and higher lows. I actually nibbled it back in. Profits that I took up there, I nibbled them back in right there. Stop loss is down at that wick right now because I think if we come down there, we're probably taking that liquidity and that might send a cascade down. Let's take some fib measurements from this current low to high and project from these lows. And the wave up made it past the 618, the subsequent wave. This one reached beyond the 618. Let's do the same thing with the following wave. Measure from the bottom to the top, project from that low. What do you know? That one hit the 618 as well. Pretty interesting how those are working. That this one is 618 of that, and this final wave is the 618 measurement of that second wave. So this can be just 1, 2, 3, 4, 5. That's the top of your third, wave 3. And this is going to give you an ABC retrace back down to liquidity, bounce, and maybe shake you out again. Or it could just be one quick flush to shake you out, and then that's all you get. So those are my areas that I'm looking to add, 73 and 72, 800 or so. And look for an uptrend to start there on a 1 hour or 15-minute and take it back up. Take partial profits once you break above the highs. And if price continues to make higher highs and higher lows on a 4 hour, you just keep buying it because this will just keep grinding up. Watch for a liquidity flush and maintains a higher high, higher low closures. You're still in an uptrend. The wicks don't matter. The structure is defined by closing price. So closing high, low, higher low, higher high, higher low. You're not getting as aggressive, so this is kind of rounding out and kind of losing steam. So maybe we need liquidity, and then we push back up. I don't know what else I can add to that. Those are kind of my targets. That's kind of a way to count the Elliott waves and maintaining the trend with the Elliott waves. Hope that was helpful. Let me know what you think. I personally prefer my methods over Elliott Wave, but I've been very well versed in Elliott Wave, so keep your stops tight. Any knife catching? If you want to get wave 4, your stop loss goes at the top of wave 1 at 70,512. But I would wait for a reaction there and an uptrend to start, and then take it long again. So keep your stops tight at 70,000. It shouldn't go below that support though. Well, keep your stops tight and have a good night.